is finishing off the feasibility study, which we expect to publish in the first quarter of next year, and work continues on that, and it's going very well. And then in parallel with that, we're also refining our thinking on funding.
Hello, you're watching Proactive. I'm joined by Caledonia Mining Corporation Chief Executive Mark Learmonth. Mark, very good to speak with you. Could you take us through the highlights from the third quarter, please?
Thanks for having me. Morning. In production terms, the quarter was fine. We did about 19,000 ounces, so we're on track to meet our production target for the year. So that was fine. The issues that really arose in the quarter were the on-mine costs that Blanket are still uncomfortably high at over $1,000 an ounce, and that's really driven by two areas: electricity, where we're just using much more electricity than we'd expected, and we have to address that, and then also labour, where we're continue to incur high levels of overtime. So there are certain things that are in train already to address both of those issues. And over the course of the coming quarters, I'd be very disappointed if we can't actually get those costs down quite significantly. So annoying, but we've got a plan, and we're working on getting those down. In terms of cash flow, clearly we benefited from the higher gold price. So operating cash flow before working capital for the quarter was over $16 million, which is comparable with the third quarter of last year, which was a much higher production quarter. But below that, we did incur quite significant increases in working capital. We've increased our stock levels to improve the resilience of the business, and we've also seen an increase in our receivables, which is largely driven by the fact the gold price is higher. And then, of course, we had another foreign exchange loss in the quarter, which is very unfortunate. Another $2 million in the quarter. That adds up to $8 million for the year, which is one of the difficulties we're facing now doing business in Zimbabwe. So not bad. We can manage the cash better, and clearly we need to get these costs down.
Mark, you've also published results from your exploration program at the Motapa Gold Project. What was the result of the program, and what's next for Motapa?
So we bought Motapa about a couple of years ago, and this is our initial exploration phase. So it's just our starter. We did about 12,000 meters of trenching, and then just under 10,000 meters of a combination of RC, reverse circulation, and diamond drilling. And that drilling was really targeting what we were looking for there, which is a large sulfide resource. But whilst we're doing that, we're also looking for oxides as well. And we focused on 4 areas, of which 3 were areas that have had historic mining. One of them, interestingly, is a brand new area that we've identified through the trenching. And it's fair to say the results were really very encouraging, both as to grade and width. So I mean, there's full details set out in the press release, but we're looking at widths of between 12 and 13 meters at 5 to 6 grams a ton, and then one hole was 4 meters over at a grade of over 11 grams a ton. So in that we're looking for things that are potentially open pittable, these grades are really very encouraging indeed. So what we'll be doing now is working out how we allocate capital to do further drilling in future years. And let's be clear, Motapa is immediately adjacent to Bilboes, and so in due course we would expect to realise very substantial synergies between Motapa and the Bilboes project.
During the quarter, you also announced the sale of the solar plant at Blanket. Why did you decide to sell the project?
Well, we don't need to own it. We built it for a cost of $14 million. It is strategically important to us, but provided we continue to get the power out of it, and we do, we've got a long-term exclusive power purchase agreement with the buyer. We don't need to own it. So having built it for $14 million, we're selling it for just over $22 million, and in addition, the buyer is now looking at putting in a further phase, a second phase, again, using their capital, not our capital. So it really comes down to more efficient capital allocation. And clearly, as we're looking at investing substantially in new projects, it makes sense. That makes absolute sense.
What's the next steps towards developing the Bilboes sulfide project, Mark?
Yeah, there's 2 real focuses. The first is is finishing off the feasibility study, which we expect to publish in the first quarter of next year, and work continues on that, and it's going very well. And then in parallel with that, we're also refining our thinking on funding, and we're looking at various permutations and combinations of senior debt, mezzanine debt, and a relatively modest amount of equity. There's about three funding solutions sort of slowly coming into focus, and clearly more information on that in future as we can. But so far it's looking very encouraging, and it's validating, slightly better than validating actually, our own internal estimates as to how we're going to fund the project. So that's going quite well.
Your priorities for Caledonia as we approach the end of 2024?
Clearly cut the costs of Blanket. So that's an immediate focus, is to get Blanket back to being a low-cost operator, finalize the feasibility study on Bilboes, and then move forwards to actually implement the project, and then convert the work that we're doing on funding Bilboes into credit-approved term sheets, so the money flows, and then we can actually start building the project. Then also the results at Motapa are encouraging, and I think exploration takes time. And I think we've got to maintain that exploration activity so that we can create a development horizon beyond Bilboes.
Well, Mark, I hope you'll keep us updated on any developments. Thank you very much for speaking with us today.
Thank you.
That's Caledonia Mining Corporation Chief Executive Mark Learmonth.